Hello, this is Brian Shannon from AlphaTrends.net. Today is Sunday, the 22nd of June, 2008, and let's take a look at the markets and where we're going to be setting up for Monday's trading. S&P 500 lost $2.84 or 2.11% on Friday. However, the numbers aren't as bad as they appear because I guess the spiders went ex-dividend and paid a dividend out of, I think, one of the people who emailed me said it was about 70 cents or so. So not maybe as bad as it appears, but still a bad day, and really nothing changed here. The fact remains that it appeared as though on Thursday the market was maybe going to try and stabilize a little bit, but instead we had a continuation of this downtrend, and we still have this path of least resistance being lower highs and lower lows. Means that when the market appears as though maybe it's stabilizing as it did on Thursday, we still had a declining 5-day moving average, and we still had some resistance to breach at that 130.36 or so. I'm sorry, 135.50 was the level that I had mentioned on Wednesday or Thursday, and saying that if it got back above 135.50, then maybe it had the chance to get up to the bigger, more important level that's been resistance here at the 137 level. Obviously, that didn't occur, so the path of least resistance continued lower. When the market looks as though it's stabilizing in a primary downtrend, it doesn't mean that you ought to go out there and get very bullish and start making wild, aggressive purchases, especially when we have that declining 5-day moving average and we've got such a weak-looking weekly chart. We've clearly got that 200-day moving average, which is declining, offered the resistance, and it looks as though this market is likely to continue lower down towards these lows and at least test those and perhaps even continue lower. So there still remains a lot of danger in this market. It got a little bit maybe oversold here in the short term on Friday, but guilty till proven innocent still. If we get any rallies, I expect the sellers to show up at a minimum, or at a I don't think it could get this high, but up towards 133.75. That's where we had this little level of support that let go. That prior support should offer resistance now, and the path of least resistance again continues lower. We're testing these lows in here, but again, with the ex-dividend, it makes it a little bit trickier to say that it's the same vehicle because we've taken those dividends out. The fact does remain, though, that we're in a downtrend. We've got a declining 10, 20, and 50-day moving average. They're all below a declining 200-day moving average. And really, other than quick scalp trades to the upside, it doesn't really make much sense to get long a market like this. The market will probably be up 3% on Monday, but just because I said that. But the fact remains that these short-term rallies tend to fail, and if you're going to attempt to trade them, you have to be super quick and get out as soon as the market starts turning against you. I don't think that it makes much sense to be trading the long side in a downtrend, but there's a lot of people who write me who attempt it, and if you're going to do it, just be aware of the risks. The USO was up again on Friday, but really nothing has changed in here either. We remain locked in this range of about 106.25 up to about 113 or so, and until that range is broken, I don't think that really we're in a trendless environment here, and it's going to be up 2%, down 2%. We've got a lot of volatility. Volatility typically peaks near turning points, but that's definitely not a reason to sell short in here. The trend remains higher. There are always going to be opportunities to sell short and make money, but I think you're better off just leaving oil alone at this point. That seems to be the more prudent situation rather than trying to pick a top in here. Breaking below 106 and a half or so, maybe you get a quick move lower, but if you're going to attempt to try and trade that, remember we've got this trend line here that offers potential support as well, and it's not just breaking support, but will it remain below there? So if you're looking at that type of trade setting up, and a lot of people are, which is why I'm mentioning it, because I get a lot of emails asking me if you think it's safe to short oil. My short answer is no, it's in an uptrend. But if you're going to do it, If it breaks below there, make sure you know where your stop is and honor that stop. If it breaks below here, be sure to cover quickly if the market turns against your position. The Russell 2000, nothing really much changed for the markets. We had a big headline day on Friday, but the path of least resistance in the S&P remains lower. Oil remains locked in this range that it's seen over the last two weeks. And the IWM still hasn't made a lower low in here. It remains underneath this declining 200-day moving average, but still struggles to find support along that rising 50-day moving average. The more times a moving average or any level that's been acting as support is tested, the more likely it is to fail. We had bigger volume on Friday as this group broke down further, but you can say we had a little bit of buying here late in the day. It's kind of toying with this 72.50 level. It got back above it. The more important level, and this is where the bigger danger is right now in this market, is below that 71.75 level. Breaking below 71.75, then I think you've probably got again this measured move projection down towards about $70 a share, and I think that could happen rather quickly. So continue to focus on that 71.75 as a key level for this market. Resistance now ought to be found somewhere up near this 73.25. We've got the 5-day moving averages starting to decline. This market's been very choppy. However, within this choppy trading, we see this pattern emerging of lower highs and lower lows. It's coming down to this level. The support doesn't look very strong. It's only spent a short period of time, and it becomes more likely to break down in here as other areas of this market break down as well. Friday we saw a little bit of late day buying. Maybe we get a bounce on Monday up towards about here. I wouldn't think it would get much beyond about 73.25, and then if it starts failing in there, well, then we've got another lower high that we could point to, and that would be probably a good area to put some shorts out or to look at that TWM. The NASDAQ 100, let's take a look at the financials actually before we do that. Financials were down at 22.18, and we've got these nonsense ticks in here. So it looks like the low was maybe about 21.90 or so, which is again below the Bear Stearns low, below right here, and below the Lehman Brothers low. So this market continues to deteriorate. We've got a declining 10, 20, 50-day moving average. This market's guilty till proven innocent. It's going to take time to heal. If they don't scare you out, they'll wear you out. We're getting a test of these lows. Maybe a divergence is setting up. That's not the type of trend trade that you want to look for. I'd basically just stay away. NASDAQ 100, the Qs here. This group still hasn't changed either. It's not below that $47 level where we've seen some support. It did break the level we were looking at about $47.75. So that puts the intermediate term in a very negative situation. The market failed to break above that 49 level at where it showed resistance, and I was pointing to the potential of a bullish pattern right in here above 49. You can look at this and say, well, that was a stupid call or whatever, because I get people that say that. But the point is, only on a break above there. It's resistance until it breaks above. If it breaks above, you got to take it seriously, set your stops on the long side, and you've got to look at these as just inflection areas. They're an area that's heavily contested in this market. If it broke above there, it would have been significant and maybe led to a further short squeeze rally, but there was no reason to be long until it got above there. The market didn't get above there. It gapped lower instead and continued along what's been the path of least resistance here recently, which is really just starting to emerge. It's the NASDAQ 100 has been the bigger leader in here. We've seen this 48 level tested once in here, and it rallied up, formed a lower high right here at this the 49 level, which was tested again on Thursday, and now we're coming back down towards these lows here at about 47.25. Breaking below there, that's where we could see further trouble emerge, because at that point, the NASDAQ 100 would be in a confirmed downtrend on the daily time frame, because it would create first this low, a lower low, and then I'm sorry, a lower high right here. We've got this low, and breaking this low here would be a lower low. We would have the 10 below the 20 below the 50, the 50-day moving average flattening out, and I think you could get a pretty good rush to the exit. We're not there yet. Perhaps we get a little bit of a bounce. I think that this level in here at about 48 and a quarter would be the level to look for that rally to fail. And we've got a declining 5-day moving average, prior level of heavily contention in here. And at that point, then you would want to start to look for evidence of this market failing. If that's the case, then you get long the quid or sell short some Qs and manage risk. Remember your stops. Don't take a lot of risk in this market. It's just too volatile to stick with any one direction for a very long period of time.